Thank you very much, everybody, for logging in today. Welcome to our monthly webinar. We have a repeat webinar presenter joining us today, Paul Grant from NDIS Lending. Hi, Paul.
G'day, Debbie. How you going? Nice to be here again, all the way from sunny Perth.
Yeah, we're not so sunny Brisbane today, but anyway, yeah, what to do. And of course, we have Min with us. I'm Debbie from NDIS Property Australia. So just a little bit of housekeeping before we get going. We are recording this presentation and you will all get a copy of the video and the slides as well within the next day or so once we've got that together. Additionally, if you've got any questions at any time, please just drop them into the Q&A box at the bottom of your screen. We're going to be more of an interactive session today where during the presentation, any relevant questions that pop up, Min will address or jump in and ask. So we'll just play that bit by ear, but I think very quickly, for those of you who don't know us, NDIS Property Australia, a little quick bit about who we are. We're advisors and consultants in the SDA space. We are based in Brisbane, but we operate all across the country, selling property and advising people on developing SDA. The SDA Housing Podcast is a great resource. If you haven't come across that, please check it out. We've been running since February 2 years ago. So what's that, 2 years and 3 months coming up now? We've just had our 233rd episode published this morning. So yeah, there's a lot of content on there. And also refer to our website, which will be NDIS.property for any other information. But anyway, without further ado, I'm going to hand over to Paul to introduce himself and get started on telling us all about lending for NDIS within an SMSF. And actually, just before I do, Paul, I just want to point out to those of you there are different circumstances when it comes to an SMSF purchase of property. You may or may not know that if you are purchasing a two-part contract, that is a house and a land contract, which is the majority of NDIS purchases, you're not able to do that within your SMSF as it is. And Paul is going to tell us all about how that is handled, how there are ways to get around that. But the simple way of doing an SMSF purchase is to buy one contract property, being an apartment or a villa. Occasionally we do work with some developers who own the land, or the builders who are able to buy the land and can then sell it as a single part contract. So there are some other options, but today really we're talking about the two-part to one-part conversion, which is quite complex. And I'm now handing over to Paul to take over.
Well, good, Debbie. Thanks for that. And you are controlling the slideshow.
I am.
Okay, wonderful. Okay, good afternoon, everybody. Morning from where I am. NDIS lending for SMSF, not a very exciting topic. Lending generally isn't, but we'll try to make this as informative as we can. Look, some of the slides that I do are more of a guide for myself to open up the conversation further. So we certainly won't go word for word on these, and obviously we'll add to them as we go through. But we're going to cover the deposits required, how servicing is done, cash you need in your SMSF to make it happen, what it's going to cost you, the third-party intermediary, which is required when you're doing a SMSF construction, and we'll come to that, explain that for you. Run through some case studies as to real deals, albeit names have been removed, as to the type of transactions that we're able to do through SMSF. And we'll go through some calculators as well. So just very briefly, you can tell by my age, I've been doing lending for 35 years. I've been in the NDIS space since mid-2021, and probably done 200 odd NDIS construction loans and about 40 in the SMSF space, which came out last year. So we think we have a fair idea of how this works, albeit we learn every day as we go along as well. Without further ado, Debbie, we'll move on to the next slide. And as Debbie mentioned, any questions throughout, please feel free to ask. So a SMSF can buy an established property, non-NDIS, with a 10% deposit. Okay. In the NDIS space, you must have a 20% deposit, whether you are buying established or construction. Okay. That is the difference. Non-NDIS, 10%, NDIS, 20% deposit. Okay. Look, one of the reasons why is there is a third party involved, which I'll come to, because obviously traditionally SMSFs could not do construction loans under the SIS Act. The lender has found via legal representation that there's a way around this by using a third party conduit, and I'll come to them a bit later on. But with our SMSF loans, 20% deposit, you're going to have an interest rate of 7.49%. There is no risk fees or LMI involved, which there are outside of SMSF. You will pay $394 application fee. You will pay $3,500 for valuation. These are commercial valuations. And no matter what state you're in, what the purchase price in, they are $3,500, okay, whether they be regional or in major city. You'll pay an annual fee of $395 and you will pay bank legal fees, which can vary from $500 upwards, all depending on the structure and how many companies and trusts are involved in the transaction. Let's keep going, Debbie. Please. Next one. Servicing. The serviceability is an interesting issue because obviously you are sold on the concept that getting 1, 2, 3 tenants, depending on whether it's high physical support or improvability, etc., it's going to earn you a certain amount of money. These properties, once tenanted, are positively geared. Very well so, once they're fully tenanted. Getting them tenanted doesn't always happen quickly, and a lot of clients are confused as to why we are asking them for their personal income details, whether they be a PAYG employee or self-employed. The reason why is you cannot rely upon projected future rent alone. If that house is empty, your SMSF is making the loan repayments. The lender wants you as the client, guarantor, beneficiary, owner of that SMSF to be contributing to the fund. Okay, if it's got $350,000 in it and you need $345,000 to make this transaction happen, which we'll see later on, there's not much left in the kitty for a rainy day and these ad hoc things that can happen to your house. So continuing to make contributions via your employer shows that the fund is going to continue to grow and have cash in it to foresee possible problems or events that may happen moving forward. So please don't be discouraged at the fact that we will ask you for your pay slips and your financials. Next one, thanks, Debbie. Equity redraw. So your 20% deposit can come from several sources. Typically, you've got your SMSF set up already, and those funds are either in a cash management account or they may well be in a term deposit under the SMSF's name. Alternatively, you might have it invested in cash, shares. You may have an existing property that you're going to sell, and obviously then you'll be cashed up. They are the main areas where your deposit and equity comes from. If you are in industry super, you need to convert that industry super or enough of it that you need to do this, because we do have clients who continue to maintain an industry super, and then they set up an SMSF and put sufficient funds into the SMSF to enable them to do the SMSF transaction, because some of those industry funds have benefits that give you good reason to want to keep them. You must have those funds in your SMSF prior to doing a purchase. Reason being, you have a land contract which will have a finance due date on it. If your funds are still sitting in industry super or a share portfolio, and you've got to get your accountant or financial planner to convert that all over and set up an SMSF, that takes time, and you don't want that impacting on the finance due date on a land contract. So we will insist that your funds are transferred to SMSF liquidable account prior to you moving too far forward into a purchase contract. Next one, please, Debbie. Financing and purchase costs. Okay. These are the costs involved in doing an NDIS SMSF transaction. Some of your clients who are watching this video may well have an NDIS property outside of super, and they would have known that they would have paid a risk fee. Well, inside of SMSF, there's no risk fee with a 20% deposit. So we're going to go through an assumption here of a house and land package in WA, land value 286, build 629. It was a 2-tenant plus carer high physical support. Total outlay, $134,026 in costs. If we can move to the calculator, Debbie, or do we need to close? Can you open that up? There we go. Okay. So we have a model here where you punch in the land value and the build price. This calculator automatically spits out what it's going to cost you to buy this property in whichever state it may be. The yellow / shall we say orange cells are the ones that need to be completed. So there's your house and land package, total 915. Okay. Estimated time to build 12 months. Look, it may happen less than that. Some of them actually do take longer. The estimated interest rate, 8.49, is higher than what you're going to pay because the third-party conduit has to borrow money as well. And they've also got to allow possibilities of rate increases. It also factors in if your construction takes 13.5 months and not 12, that what they have charged you in interest is going to be covered and not able to keep on coming back to you and asking you for more money. So as you'll see in section B, estimated total costs to buy, or purchase, I should say, and do this deal with a third-party conduit, which includes 12 months worth of interest, is 86,441. Their costs, which people ask me all the time, what are their costs in a dollar figure? I cannot tell you. Not being flippant there, they have legal fees, depending on which state that their lawyers are based in to do their contracts, varies to what the legal fees will be. They have PEXA costs, they will need to pay stamp duty, they have got their own borrowing costs, they have to pay for valuation, they've got lawyers who prepare the on-sale contract to you, they've obviously got to do the conveyancing on the land, and they've got to liaise with the builder. So that 86,000 includes 12 months worth of interest and third parties borrowing costs for that 12-month period. So your total outlay is $1,001. Add some. You will put in your deposit. 20% of 915 is 183. Those costs for you to get into this transaction of 86 gives you an amount payable at land settlement of 269,441. Okay. You are obviously prepaying 12 months of interest. The third party is not going to pay your interest. You're basically paying their interest. If this was an established property, you'd be paying interest anyway. So the real out-of-pocket or over-the-top cost is the third party's costs, which out of that 86,000 might have been 40. That's the over and above that you would normally have paid if you were buying an established property, albeit you would have paid that interest monthly, not upfront. But to do it under a construction loan on a 2-part contract, this is the only way forward that you have. Once you've paid that 269, they will then settle the land. They then go and build the property. You and I, if you were using access lending, would come back upon completion of that house. Down the bottom in section F is where those fees and charges that I quoted earlier regarding the bank costs, valuation, etc. And you will have stamp duty on a finished product. And on this property in WA, on 915, that stamp duty is 47,689. So your initial outlay of 269 plus your stamps and borrowing costs at the end, you are paying out $317,000. And as that will vary from state to state based upon stamp duty. If you have got $315,000 in your SMSF, we're probably going to have a serious discussion because you're not quite there yet. Yes, you may be on good incomes and contributing to your super fund. That may only be $20,000 or $30,000 a year. In 12 months' time, you may well have a vacant property. You may have a vacant property for 6 months. Mortgage payments may be $5,000 a month. There's $30,000. You're sort of really running skinny. Min has some ideas as to what you need. I'd be happy if you looked at 12 months repayments at $5,000. We're looking at $60,000. closer to 380, 400,000 is probably a safer bet, just to leave yourself some wiggle room there, because you have insurances to pay, tenanting costs to pay, rates and taxes, etc., etc. But that's a discussion that we may well have later. Okay, let me back to the slideshow. So that 86,441 plus those stamp duty plus those costs is the total of that 134,000 that you saw. Just to give you an example, just for the sake of the exercise, if you were buying a non-NDIS property for that 915, so it's non-NDIS, still paying 915, there's your total outlay, 171. Borrowing cost, purchase cost, total required. If it was a 20% deposit NDIS property, there's your cost required, 316,884, 317,0, whatever it was on that calculator. So it's the third-party fees, which are the ones that make up the big difference, okay? But it's the only way you can do it with a construction loan inside SMSF. I hope that makes sense. And we can do these numbers on other properties in other states, and the main one that's going to change will be stamp duty each time. But yeah, that just gives you an idea. If you're not buying NDIS, roughly what it's going to cost you with a small deposit. If you are buying NDIS, an example that I've used, it's at 317,000 that the calculator showed you.
Thanks, Paul. Can I just butt in, Min? Did you want to quickly have a chat now about the holding costs required, as Paul just mentioned?
Yeah, sure. I mean, it's more than just holding costs, everyone. As you can see with Paul's numbers here, it's $316,000 for the deposit and other borrowing costs. What you need to add to this number here is also the insurance cost, going to be about $5,000–6,000 there. I suggest you pay it up front at completion. A furniture package of about 15 to 20 grand there. Provider fees of about $20,000 to $25,000 to procure participants, but also to engage the SDA provider. And then also a buffer. So 6-month buffer of a P&I is $50,000 right there, I think. Okay. So 50 to 60,000 there, 25,000, 15,000, 5,000. You need another $100,000 cash at completion on top of this 316,000. Okay. Unless I've said it wrong with the whole prepayment. Paul, that 316, does that include your 12 months prepayment in there?
It's the initial interest payments, yes. The interest payments
sure.
are 6, yeah.
Sure. My numbers are post-construction completion handover. 50,000, 6 months of mortgage buffer, 25,000 provider fees, 15,000 furniture package, 5,000 building and home insurance. Okay. That's $95,000 additional to this number. So personally, I would say to any investor going to SMSF, NDIS, 400,000 minimum. And why I'm bringing this up is because we're getting more and more calls from investors saying, no one told me about my vacancy period. I've only got 2 months of vacancy allowable. And then after 4 or 5 months, you can't get a tenant, you have to sell the property. You can't meet the payments. And that's why Paul said, you got to have serviceability. And the serviceability here really is your 10% SGC, superannuation guarantee contributions, plus the income coming in from the property for SDA. 2-3 months of getting it onboarded with the NDIS portal, and then 6 months of vacancy period. There's 6 to 9 months right there, period. You cannot ever assume that you're going to get a tenant on day one, because it won't happen on day one. I think realistically, Debbie, what do you think? Realistically, tenant number 1 in month 3 or so, 3 or 4, and then tenant number 2 probably month 5 or 6. That's the average we see out there in the marketplace, yeah?
Yes, that's correct.
Okay. Yeah. So that's all I have to contribute about that topic there of amounts required to make it really work for a 2-part contract being converted to a 1-part contract, as what Paul says, and then the buffer and amounts required after construction completion and handover.
Yeah, great.
Okay.
Thanks, Min.
Well, good. Let's keep going. Next one, please. Okay, the third-party involvement. So as I mentioned, SMSF cannot do construction under the SIS Act. It's not making any money until it's got tenants. So the lender has engaged a third-party not-for-profit charity for obvious reasons to get around this policy glitch. This third party basically bridges the facility for you. So they go on title of the land and they go on the build contract as the owners. They will cover the construction, you've prepaid interest, the builder will make their claims in, and they will pay the builder their claims through the progress payment schedule. Whereas your safety net or your agreement with them that it's going to be your house when it's completed, they prepare an on-sale agreement. And these on-sale agreements vary state to state. That on-sale agreement is prepared to your bare trust. So you have an SMSF trust, which is, call it the Grant Family Superannuation Fund. Okay, the bare trust you would put together after you've found a property, because a bare trust is the custodial owner of the property on behalf of the SMSF and is property related. If you have 6 SMSF properties, you need 6 bare trusts, property specific. So that on-sale agreement is made out to the bare trust. That's when they ask you for your $270,000 as per the calculator. Upon completion, you will pay them out via Access Lending, who has given you a formal approval up front upon completion. And that ownership will then transfer to you. You pay the stamp duty. You have your Access Lending loan, which moves on as a normal P&I loan, as we have mentioned, and they have been removed. Okay. As I just said, we approve your loan up front. We're not going to put you into this transaction, wait for 12 months and then find out whether you're going to get the loan or not. That is all done before this starts. The third party will not go to contract until we give them an approval to say that you will be supported. They then go away and get their finance in order, get their valuations done. Their finance is through the same lender as your finance. And there is only one wholesale lender in Australia who is doing these, accepting the NDIS rental return and valuing these properties as a SDA property, utilising the rent that they're likely to achieve in the future. I mean, they value up. They are valued based upon income. They're not valued based upon the 3-bedroom house that sold around the corner, which is a normal residential property. Next slide, please, Debbie. Okay. So as that calculator showed you, their costs are 86,441, which you pay as well as your deposit. Interest charges, I mentioned all those PEXA fees are all covered by them. Okay. With these SMSF NDIS deals, the most important thing is timing. An NDIS deal normally takes between 4 to 6 weeks to get approved. The valuations alone take 2 to 3 weeks. And then you can imagine you guys getting SMSFs and bare trusts set up. We're getting the lender to approve your loan. You've then got a third party liaising with landowners and builders. There's a lot of pieces to the puzzle and everybody's got to work cohesively to make it happen. That is why you would need to utilise NDIS property, because the third party does not deal with the general public. You cannot approach them with a land contract and a build contract and say, we want to do business with you. They only deal with mortgage managers like ourselves and project managers, which NDIS properties would be the project managers. So you can imagine having 600 clients running around with land contracts and build contracts. This third party is not built to deal with the general public. So you need to utilise NDIS property who project manage. They're the ones that will go and get the land contract signed. They'll get extensions on land if it's required. They'll liaise with the builder. They liaise with the third party. They liaise with us. They're the conduit in the middle who's got to put all the pieces of the puzzle together. Easy. Because vendors will put 21 to 28 days on their land contract. We know that's not achievable. So that's where I'd go back to Debbie and Ming or one of their teams, say, can you please get us 45 days because your client's about to pay $3,500 for valuation. They're not going to move out. Their loans do not get declined. 100% of these go through. Can you please get your vendor to extend so that we have enough time to make this happen? That's what your project manager does for you on behalf of the third party. Next slide, please, Debbie. Application process, as I mentioned, it can take 6 weeks. Okay. Getting all those pieces of the puzzle put together, transferring from your industry fund to an SMSF, getting your SMSF set up. By the way, it's got to have a corporate trustee. You can't be Mr. and Mrs. as trustee for the trust. You've got to have a corporate trustee. Okay. Those things have to be set up before you can purchase, because we've got a finance due date pending on the site. So the best way to get your loan application into the system and running smoothly is to have it all up front. So I will ask you for a pile of information, or your broker, who depends where you go with this. And those documents that we ask for, which I mentioned earlier, why do you want them? You've just got to supply them. Your last 2 pay slips, your 2020 income statement. They want your bank statements. Okay, they want copies of the SMSF bank account, the SMSF trust deed, identification. Next slide, please, Debbie. Self-employed, they want your tax returns for the last 2 years. This is all to see whether you are contributing to super and are earning enough income to be able to support the fact that if the property is empty, you are still earning income, enough income so that you can be contributing to your fund, so that bank account is continuing to grow. Your SMSF tax returns and auditor certificates. So you need all of these things. That the lender will not approve your loan without them. We will give you a pre-approval subject to some of those requirements, so that the third party can go away and go to contract, because this could take a long time to get some of these documents. They may not be ready yet, but at least whilst you're getting them ready, you've been given a pre-approval by us. Third party goes to contract, they're getting their valuation order. That's all a 2-3 week process, gives you and us time to get these other documents in. The lender is looking to simplify these requirements moving forward. What that means, I do not know. They do say they're going to ask for less information, but at the moment we supply them with everything to avoid them coming back and forward every 3 or 4 days saying, can we have this, can we have that? So if you can supply everything required up front, perfect day, we'll be able to move forward and meet the timeframes that we need to. Next slide, please, Debbie. Case studies. So that was how SMSF works. So it's a 20% deposit. You need a large sum of cash over and above what's required to make that purchase happen. You need to use a third party, which is the conduit for the bridging side of the loan. You need to use a project manager to oversee all those pieces of the puzzle, the lender, the broker, the third party, the builder, and the real estate agent, developer, vendor. They're the ones that put all that together. You need to set your SMSF up and have all documents that you asked for. So we are ready to go to get your loan approved within that 4 to 6 weeks time frame. Case studies. So these are real, and presuming some of them you might think this is us or this is not us, but there's a few of them here, so we'll quickly run through them. These applicants are PAYG, decent incomes, got a home loan. Their personal debts don't come into servicing SMSF's standalone deals. So albeit the bank may ask for your bank statements, your credit cards and living expenses don't come into the transaction. That's probably one of the things they're going to stop asking for moving forward, but at the moment they are asking for them. They've got 400,000 in their SMSF bank account, magical. They're given a pre-approval of $1 million. They may not need to spend $1 million. They might be buying something for $920, putting a 20% deposit, but the calculator says they could borrow up to $1 million, just where they want to go with the purchase price. All documents are supplied, everything's approved quickly, happy days. So that's possibly that previous calculator where the borrowings were 315, they've got 400. So that, they're close to where Ming says they need to be. So that one was done quite simply. Next one, number 2, please, Debbie. These guys are PAYG as well. Big incomes, couple of kids, house, no problem. 5 investments, so they're doing quite okay. They've got 150K in industry super. Okay, don't have enough. Cannot get a construction loan by the calculators that we've used. Maybe an established apartment. You'd have to run the numbers on what sort of purchase price they're paying there. But at this stage, we could not help these people. Okay. Next one, please, Debbie. Number 3, self-employed. Okay, good net profits. Own the house, 250 in an SMSF bank account, 200K in an industry super. That's probably industry super prior to becoming self-employed, possibly. They used to be PAYG. They also were approved $1 million. They had to convert some of that industry super over to their SMSF, because 250K wasn't enough. But we could see between the two funds, they had sufficient to get into a property similar to the calculator we used earlier. That would have been one of my questions to them. They would have shown me their SMSF bank account. They would have shown me their industry account. I would have said, right, we can give you this amount of money. Here's your pre-approval. Before you go to contract with NDIS Properties on a house and land package, we need to see that 200K or a large chunk of it transferred to the SMSF so you've got enough money to settle that land settlement. Easy one. All good. Next one. Thanks, Debbie. I'm just flying through these to make sure we've got enough time for questions later. Interesting one. Okay. Self-employed running a restaurant. Male applicant 67, females 58. We all say age doesn't come into it, but we know with lenders, age does come into it. Net profits are okay. $900,000 in an SMSF. Fantastic. Male applicant was withdrawing part super as in pension phase. Albeit still working, earning some income, he was taking a portion of his pension. They're in a strong financial position. The lender is hard and fast in their policy. If you are in pension phase, you cannot have an NDIS SMSF loan. We have asked them why. These people have good savings, they're still working. Their black and white answer is they're in pension phase and we do not want to do it. So unfortunately, this applicant could not do an NDIS property. They could probably go and do a normal outside of NDIS investment through their SMSF because there's multiple lenders that you could use then and possibly not bound to that policy regarding the pension phase. Number 5, I think there's a number 5, Debbie. No, there's no number 5. Calculators. We've looked at the calculator regarding the pricing model. If you wanted to work out your borrowing capacity, you can get access to that via our website at accesslending.com.au. There's a calculator there or button called Tools. You can click on Tools and it will show you repayments. It'll show you stamp duties. It'll show you amortization charts. There's all sorts of calculators there that you can utilise to see what your borrowing capacity is inside and outside of super and what it's going to cost you to do it.
Did you want me to quickly bring up that?
If you want to show the
link?
home page, and we'll just quickly show where the tools are, if you like.
I will. Just bear with me while I bring it up. I actually do use this all the time. It's very useful. Let me see if I can swap to... I might have to stop and start again.
That's okay. That prezzo is finished. But...
Okay, great.
I actually use these calculators all the time myself because if you Google calculators, some lenders and some brokerage firms then want all your contact details so they can contact you regarding what you're actually applying for. At least with our one, you can utilise this free of charge and we're not going to ring you and say, oh, you're on our website. Are you willing to buy a house?
Yeah, there's a bunch of good ones. I actually use the stamp duty calculator all the time because it's very useful.
So there's calculators that you guys can utilise if you wish to, no problems whatsoever. But apart from that, I'm finished with the boring lending stuff. If you've got questions, Ming, that people want to ask.
Hey, Paul, in your calculations earlier on the PowerPoint, did that include the stamp duty number 2?
Down the bottom section. Down the bottom section F, it showed 47,689 as stamp duty.
Okay.
42.
So just for our listeners to know, there are 2 stamp duties payable in the calculations. There's stamp duty number 1, which is the house and land stamp duty, normally a $4,000, $5,000, $6,000 cost to acquire the house and land package by the third party proxy, as Paul calls it, the third party. That's about $4 or $5 grand there. And the second stamp duty is the full amount of the retail product at the end at handover. Okay.
Which in this case was 42,689.
Yeah. Just so people can be aware, there are actually about 5 to 6 lawyers involved here. Okay. The lawyer of your lawyer, number 1, the third party lawyer, number 2, the lender's lawyer, number 3, the land vendor. Number 4, and is it 4? There's 5. There's 5 lawyers: lender, lawyer, third-party lawyer, builder lawyer, or builder and land lawyer. And this is lender. So there's 5 lawyers involved in the transaction. This normally takes about 3 months to transact the paperwork alone. It takes a long time, doesn't it, Debbie?
Oh, it does take a very long time. Yeah. It's a very complex process from their end.
Yeah. So make sure you do your pre-approvals for someone like Paul first. Understand the process, because it is a very complex process. My advice to everyone, and this is what me and Debbie would say to everyone, is talk to your accountant in terms of the setup costs of your SMSF and rollovers. Talk to your financial planner in terms of getting an independent advice of doing this complex transaction. You and then talk to your lawyer. You need your own lawyer as well. So your lawyer, your accountant, your financial planner. Hey, Paul, with the lenders, do they normally require a SOA financial plan to be issued and created before they lend?
No.
They used to.
Yeah, they used to, not under the NDIS product. Also, I mean, so with the lawyers, a lot of the problem is the client's lawyer and the third party's lawyer don't agree on terms in the on-sale contract. I can give you and or your client a blank master template which has no names or addresses in it. If that is then required, some clients' lawyers just sign them off straight away. Others say, I don't like this, I don't like that. I can do a template which they can be given to preempt some of those questions that may arrive, which obviously then cost everybody more money because lawyers do things by the hour and take more time. So we can get over some of those hurdles if we need to, if the clients, lawyers and accountants are a bit unsure of what's going on.
Before we jump into Q&A, Debbie, Paul, I just want to bring back to the fundamentals of why people are doing this to begin with, right? They may see that there's an opportunity to have a tax efficient entity to hold their retirement wealth. In superannuation, as a SMSF entity trust structure, the maximum income tax is 15%. Whereas the maximum income tax outside of super, normally for everyone, is 45% plus Medicare. CGT is 10%, so 10% of the capital gain. If you hold it for more than 12 months as an asset, it's halved by 50%. So the maximum CGT, capital gains tax, is 5% if the property is held for more than 12 months. If the property is held and sold off in your pension phase, retirement age, so 63, 64 onwards as an age, and given the fact that most people are going into this at age 45, 50 anyway, if you hold your asset for that long in pension phase, the capital gains tax is 0. Okay? So from a tax efficiency point of view, it is very effective to actually hold an asset like a property, which is growing in value or paying income in the SMSF environment. So that's the primary reason why people would be using their superannuation. Number 2 is what do people get in returns in superannuation? 9, 10, 11% as an average. So we're considering the fact that, Debbie, what's the average gross and net yields in income for SDA properties normally?
Maybe 12 gross, 9 net as
So
a minimum.
So minimum is 11, 12, 13 gross, 9, 10-ish is net for a 2-participant home for SDA. So they are on par right there with normal superannuation, on par right there, 9 and 10, 9 and 10. But the difference is you're on leverage. You have leverage and capital growth of 2, 3, 4% on the actual property value as a top possibility. But also, Debbie, indexation. You want to explain to our listeners the indexation of income, please?
Indexation, I'm sorry, I'm not sure.
SDA income goes up by every year.
Yeah. It goes up by CPI every year. So that income goes up every July. Secondly, those numbers we've just quoted, those rough gross and net yields, are if you have participants in there with a lower level of funding. Now, I don't want to confuse things too much here, but there are so many different funding levels that a participant can have in their plan. And we estimate a lower level because that is going to be probably a more likely income that a participant will bring with them initially. You have far less people who are approved for the higher levels of funding. For example, high physical support to live in a house with one other tenant. So we estimate the more likely common lower funding levels. Now, what is often going to happen if you have a participant apply to move into your house and they've got funding to live in a 3-tenant house to share with 2 others, which is a more commonly provided funding from the NDIS. They can, once they've moved into that house, which is enrolled as a 2-tenant home, they can then apply for a change of circumstances and have their funding increased. So not only can you then potentially increase the income to a higher level simply because the participant is able to increase their funding, but it still goes up every year for the 20-year period that that home is an enrolled new build SDA property.
Awesome. Thanks, Debbie. Let's get into these questions, please, Paul, Debbie. Start with the last one. Suresh, he asked here. Hi, Paul. Thanks for the details. When you mentioned about third party who can bear the P&I during construction, etc., what is the fees and why they do? Can this be done outside SMSF?
So I didn't quite understand that question. Say it again,
Either
please.
way. Hi, Paul. Thanks for the details. When you mentioned about third party who can bear the P&I during construction, etc., what is the fees and what do they do? Can this be done outside?
In that calculator, those third-party costs were $86,000 on the Excel calculator. That's $86,000. So that includes your prepaid interest for 12 months, 86441, Section B. So that's Sunrise, who is the third party. That's your interest costs and all their administration and holding costs, which were briefly touched on, PEXA costs, legal fees, etc., and their borrowing costs. That's what happens for the first 12 months. After 12 months, so as you then take over the loan payments, of which could be $5,000, $6,000, $7,000 a month, depending on your loan size. Is that the answer you were looking for?
Pretty much, yeah. He's asked, can this be done outside SMSF?
Yes, we do NDIS all the time outside SMSF. Same thing applies, you just avoid that third party. So that you are just a normal, if you like, normal. It's a normal housing loan transaction where you make interest-only payments monthly until completion, and then it's P&I. So you are the customer. There's no third party involved outside of SMSF.
I'm not sure if Suresh maybe perhaps meant can the fees and P&I be done outside of SMSF. I'm not sure, Suresh, what you actually meant by that. But no, if you're doing an SMSF purchase that is a 2-part contract being converted to a 1-part, everything has to be done within the SMSF.
Yes.
Okay, next question.
Our next question is from Vanessa. But this is more of an accountant question, I think. Borrowing and building a SDA property for a family member already approved for SDA. I believe we are unable to rent to a family member when having an investment under SMSF. Is this correct?
Vanessa and I discussed this on the weekend.
Yes.
Chris, Vanessa and I just discussed this, and they taught me something because apparently you can't.
No, it must be an arm's length transaction between the owner of the property and the tenant. Yeah, you need to talk to your accountant about that. The answer is yes, definitely no, you can't, but it must be in commercial terms. Now, I can't really comment other than the fact that what if they are, hang on, let me ask you a question to Debbie and Paul. If the government, the NDIS is the one paying the SA income, surely the accountant can apply for an exemption for that arm's length transaction
Yeah,
may
it's
be.
probably complicated. It's possibly the case of, is that family member a member of the trust, as in a beneficiary? Are they not a member? I was looking at doing one for my partner's mother, who has nothing to do with my SMSF. So it's probably black and white and grey, Vanessa. I don't have that answer for you, but we can find out.
Yeah, my advice is talk to your accountant to talk to the ATO. That's my advice there. Next question is, who are the lenders, their names, and how many are there? Paul, you want to answer this or not?
It's quite simple. It's just not a $64 million question. There is one wholesale lender. They have multiple companies. The parent company is called Colcap, COLCAP. They trade as Origin, ORIGIN Mortgage Management Services. So they are not a bank. They receive their funding via securitization, which we won't go into today. A lot of banks do that nowadays. We used to lend off balance sheet deposit funds. They don't. They securitize now. It's a different discussion. Origin do not retail. They are not on most aggregator or brokers aggregation channels. So they only deal with mortgage managers. So you've heard of Access Lending, that's us. There's Granite Home Loans, there's Better Mortgage Management. We are all mortgage managers who, if you like, are the retail arm of that wholesale funder. So whether you're going to Access Lending or Granite, you're getting the same loan from the same lender. All that's going to be different is the person you're dealing with and possibly some fees and charges. For example, Granite don't do SMSF construction, Better Mortgage Management do, Blue Bay do. So one lender, 5 or 6 mortgage managers selling the same product. Melbourne Mortgage Company is another one. We do the same thing. It's just a case of who you're dealing with.
Can you
Thanks for that,
very
Paul.
quickly cover, Paul, other banks and other lenders that could potentially provide an SMS loan and the
Yeah.
complications?
Can I jump in there, Debbie?
Yeah, sure.
If the product was built or a second-hand established NDIS or normal property, yes, the likes of, Westpac and the Trobe or Resi may be jumping in there. But we're talking about an unbuilt product, which is a house and land and an NDIS topic in its own right. So there are minimal is the word, minimal lenders out there who are playing in this field where they work with a third party like this one here, of course, Sunrise, because it is a complex topic. Paul, would you agree with the whole SMS lending with normal lenders?
And there's 2 third parties. There's Sunrise, who we use, and there's another one that used to be called One Contract, who have a different set of rules and regulations. There are a few lenders doing SMSF, NDIS. This lender's SMSF product inside and outside of super at 7.49 is cheaper than pretty well all the banks, because we do a lot of SMSF refi. The Latrobes and the like are paying 9, 10, 11% interest. Pepper may look at one for you, but Pepper will only go to 60% LVR. And look, as a client, you may well have a lot of income and a lot of property, and you're business banked by your bank. They may well do it for you because you've got enough stuff going on outside of NDIS to give them comfort.
Okay, so Debbie, next question here is from Sunny. I have an SMSF already set up. Would be ready this month. Funds roll next month. Total is $205,000. Is this enough, Debbie?
Potentially, Sunny, you could purchase a single contract, an apartment, where you will need 20%. You may not need 20% straight away. If it is a complex that you're buying off the apartment, you're buying off the plan. Let's say, as an example, an $800,000 apartment, you would need in total to pay $160,000 as deposit. You'd need 80 up front, plus whatever legal and finance costs initially. At settlement, which could be 15, 18 months away, you would need to make sure you've got that additional 10%. So your loan, 80% will cover the rest of the settlement, but you will also need that buffer. So in your case, if it is $800,000 apartment, you need 160, you've got a $45,000 buffer there, but you potentially have 18 months to contribute additional into your super and therefore up your buffer.
That assumes that Sonny is contributing more and redrawing equity out of his house, more lump sum to do superannuation, because he has to pay stamp duty. $160,000 plus stamp duty is 40 to 50 grand there, plus provider fees, furniture package, insurances, and buffer. You need to have 300 grand there, my friend. And if you can get your numbers up 300 grand, then sure, all good. Only if there's enough time and space to put more money into superannuation.
Yeah. But I guess as the calculations showed earlier, if you were looking at buying a house and land package and needing to have that converted to a single part contract, definitely not enough. As we've said, the bare minimum would be 400.
But this is assuming DDD, Debbie. Please explain to our listeners what DDD stands for.
It stands for desirability, design, and data.
So crunching numbers on a spreadsheet is cute and awesome with Paul, but you still got to remember that it has to be in a good area. Have a lot of participants, good providers managing it all, and getting the right products designed for the right area. It's very, very important. That should be the most important thing overall, not the number crunching, Debbie.
Oh, look, absolutely. And to get those 3Ds, you know, you are going to be looking at a higher entry price in general, especially if it's a house and land, because you want to build a house and land these days in an area that is more desirable and driven by data, and that is going to be more expensive, full stop. The apartment option or villa option potentially can get around that, where you have got your single contract already, and it could be potentially significantly less. We have had apartments recently for sale around about the $700,000 mark in Sydney. But we're now looking at those prices going up. Probably the bunch of apartments we've got coming up in Sydney are going to be more in that mid-8s, I think, Min. We've got some in Melbourne that are now in the 9s. So even with the apartments, and it is already a single contract, which is great, you're still looking at the 300 mark really as a comfortable place to be.
Yeah. And I would like to tell everyone, and Paul will agree with me here, just because you can just qualify for the numbers on the calculator doesn't mean you should be doing it. Like, if all the stars were aligned, the perfect location, the perfect builder, the perfect design, the perfect quality specifications, and the perfect participant numbers, and you just scrape in, just for calculations wise, the what if there's building delays of the property? What if you can't afford more than 6 months payments of an empty house? You know, the last thing that we or an advisor or accountant or financial planner or even Paul wants to see is to have someone jump into an NDIS SMSF loan and they can't afford to hold on to it more than 6 months, because what if something happens? The construction delays, you know, and you have to meet payments from the lender. You can't afford to pay it. It's the worst place to be in. And that's why we say minimum 350 grand, yes, but comfortably 450 to 500 grand is where you should be. But it depends on your personal situation to be able to top up your funds using other sources of funding, being SGC or equity redraws, right? And speed to market construction wise. Paul, do you agree with me there?
Most definitely, Min. And look, I've seen some families who are really keen to do this. They really want to do it. And that there are some options, not available for everybody. I've got some, because SMSFs, you can have multiple members. I'm doing transactions for mum and dad in their 50s and their sons are in their 20s. The sons don't have big super. Mum and dad have a lot of super. Sons have a long time to go on earning income. So, you know, they've put in 80,000 maybe, and mum and dad have got 400. So it solves a problem. I'm doing another one, 3 brothers and 3 wives. Now that can get complicated in family dynamics, but they've pulled all their, you know, 200 grand each into it evenly, even members as far as shareholdings, and they want to do it. And so there are ways for different people with different family situations to make it more realisable and comfortable for them to do.
Yeah. So as Debbie and I will tell you on the phone 101, no rush. Do not rush into this. Seek your advice from your lawyer, your accountant, your financial planner. If anyone's telling you it's easy, it's not easy. It's a drawn out process to start the process. And it is costly to do so. So, be very mindful of all these warnings we're giving you. It's costly, it's time consuming, and it could be stressful waiting for the acquisition of it. And Paul, you mentioned something earlier. It's hard to find land. It's hard to find stock out there. So do your preparation with your mortgage advisor, get your pre-approval, get your paperwork ready, submit it all, because you got to act quick. The last thing a vendor wants to do is have a block sitting there in limbo for 3 months while waiting for finance approval, which takes 3-4 months, and paperwork-wise. So that's also an issue that we are conscious of. It takes time to pull this all together. And the vendor, the seller, wants to sell it in 3 weeks, but we can't do it in 3 weeks. It'll be done in 3 months' time, yeah.
Can I also just add in that there's another complication, particularly with Sunrise. They have strict limitations also, not only on time frame of build, but also on the builder. They will do their own due diligence on the builder. We have had them knock back SMSF deals because they weren't able to be comfortable that the builder would manage to construct within 12 months. So there's a lot of different steps of DD that the Sunrise and the lender will go through as well, in addition to everything else that you need to be doing.
Hence
And
where-
listen, everybody. Look, there's lots of different. There's a few different options out there. No one's saying you have to use this lender. You have to use this third party. We're just simply today explain to you what the process is in general, paperwork wise, cost wise, and finance wise. If you want to use your own lender who can help out, then great. But today's example is example only of the process. Agree, Paul?
Yes, definitely.
Yeah.
We're here to help. We're here to advise. If anyone wants to ask specific direct questions, happy to do so. Contact Debbie or myself or Paul. We'll make the arrangements to discuss. But step one is to understand NDIS properly, just to begin with, number one. Number two, make a decision that you want to do this. Number three is ensure your numbers are strong enough, being 300 to 400 grand at least, in that range. And number five, begin your rollover process and your advice with your advisors, being your lawyer, your accountant, and your financial planner. Do not let anyone out there, another agent, another spruiker, anyone, try and push you into this without you being comfortable and aware of the process. Because if something goes wrong, you're going to say, but he told me to do it. It's easy. It's very simple. It's not simple. It's a complex process. And with the right advisors and the right product, DDD, data design desirability, it can be done correctly. But you've got to have the right product in the right area with the right financial backing, being at least 400 grand for your situation, in superannuation, yeah. Debbie, Paul, any final words of advice from you guys before we finish up, or any questions here? Sorry.
No, don't be scared. You need to know the hard questions and the hard answers, but don't be scared. I'm more than happy to speak to your clients and run through with them.
Debbie, there's a question here, Debbie.
Just
from
saw
Suresh
that
again.
pop in. Yeah, hi Suresh. Yeah, please confirm if the NDIS deposit required outside SMS is also 3 to 350. No, Suresh. Depends on how much you're going to be borrowing. Is going to be the deposit needed, plus of course your legal and finance fees and the buffer. So, but it won't be that much. Generally, that deposit for the SMSF third party is basically a 30 to 35% deposit, which is why it is significantly higher. So if you are looking at only at borrowing 90% and contributing 10%, then it's a $900,000 package. Then you only need your 90 plus expenses, stamp duty, holding costs, and a buffer. So we would suggest that in that case, you probably need at least 250. Yeah.
Yep.
Yeah.
Those numbers are in that slideshow for that too. By the way, there was a 10% example.
Yes, there was. Yeah. So Suresh, you can go back and have a look through that when you receive that. Okay.
Okay.
Well, nothing else from me. I think that wraps it up. So thanks to Paul and Min for sharing your expertise today. Thank you to everybody who logged in. And as I mentioned at the beginning, you will get a copy of this recording and the slides in the next day or so. And enjoy the rest of your day.
Good, thank you.